The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 16th Terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I am grateful for your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential is what we must master each and every day. So let's start off our day with some empowering thoughts about determination. You know, folks, I've worked with a lot of people in my life. I've worked for and with those folks. I've played individual and team sports, and when any of these folks are asked to describe me in a word, the words most often used are words like determined, persistent, unyielding, positive, and passionate. You probably could have guessed those words, and all of these words are the wake-up call to what I call human will. And people who fail to achieve their goals usually get stopped by frustration. They allow frustration to keep them from taking the necessary actions. I say take massive actions that simply support them in achieving their desires. You know, you get through roadblocks, folks. We're always going to get through roadblocks, and the way you get through them is by plowing through that frustration, taking each setback as feedback that you can learn, even more from, and going ahead and just simply pushing ahead. I doubt you'll find many successful people who have not experienced frustration out there. All successful people learn that success is buried on the other side of frustration. I always like to think of it as a seed, that you might go plant in a garden and you water it, and, you're eager. You're waiting for that seedling to come up through the earth, and, if it gets a little, maybe you don't get so much rain or you don't water it, the ground gets crusty, makes it a little bit harder for the seed to be able to get through there, but it will. It's that little engine that could. It will just simply pounce through there. I take a look at frustration as being that you are so close to actually just simply being able to learn something and get through. When we take a look at the stock market, we take a look at levels of resistance and support. It's the same thing out there. I say be determined, be persistent, be unyielding, be positive and passionate in achieving your goals, and most important, folks, enjoy the journey to your destination. Thanks for making TFNN your destination this morning. Let's go check out the destination of these markets. We've got the Dow up 110 points right now, traded out at 14,711. The S&P trading at 1565.66. That's up 13.5 points. The composite up 25 points, trading at 32.41. Small caps, Russell 2000 up 7 points. They are the leader in the clubhouse. Well, neck and neck here with the S&P 500. Both of them up about 0.86%. Google up $5 and change. Apple up about $2 right now. Microsoft is up 34 ticks. Intel up 18. Leading the charge, the upside price-wise, you got Grainger up $17. That's up 7% here. GWW is the ticker symbol. Let's see if they are out with earnings here. Their earnings, what do they do revenue-wise? Where's their net earnings? $211 million versus $187. Very nice. Net sales, $2.28 billion versus $2.1 billion. They are getting the reward this morning. We'll take a look at that stock chart. Priceline up $5 and change. They got whacked yesterday. Right now they're up 0.7%. Google next are up $6. Equinix, EQIX up about 2%. I don't see any earnings release on them. They're up $4 and change. Chipotle, CMG. We'll go take a look at that stock chart. Had a caller yesterday looking to go short Chipotle, and when we were taking a look at that, it was moving into a swing point with volume. We'll go see if it's taking that level out here or if it's just recouping some of yesterday's losses. It's up $4.33 right now. You've got Precision Cast Parts, PCP, up $3 and change. Sherwin-Williams up $3. To the downside, Sarepta Therapeutics, SRPT, is a ticker symbol. They're down about 13%. That has been a rocket ship. We'll see if there's any volume behind that move. You've got Panera Bread down $3 and change. That's off about 1.8% out there. Netflix off $2.50. Goldman Sachs down about $2. Netgear off $2. That's off 6%. And Keynote Systems, KEYN, off 13% this morning. Our call number is 877-927-6648. Let's start off by going and taking a look at the ETF structure out here. Because when we take a look at yesterday, we had volume off of the top of the NYSE, which is the breadth of the marketplace. So that is very important out here. If we take a look at the SPYs, also volume off the top. We had the SPYs that got over the October 11th, 2007 swing point. That swing point had 233 million shares. As the SPYs took that on, they did it with 135 million. That was last Wednesday, April the 10th. Made a slightly higher high in that next session with 110 million shares. Yesterday, moving down with conviction, 216 million shares to the downside. So let's take a look at some of these high-volume bars out here. Let's see if these are bars to the upside or to the downside. You take a look at yesterday, clearly to the downside, 216 million shares. As I come back to the left-hand side of my chart here, let's take a look at February 25th. To the downside, 245 million shares down there. If we come back, you come all the way back here into December 31st, 243 million shares. That was to the upside. That, folks, that says that is where you go to the downside on December the 21st, 245 million shares out here. Come back a little bit further to the downside on November 8th. That's with take that back. That is with 263 million shares. All the big volume days really to the downside with one exception, and actually it was moving down anyways. It moved a little bit lower on December 31st, so a little bit debatable. That certainly is we could call that a untested high volume low. That's for sure. That's where the markets are going to go back to. That is the breakout area, and the markets want to get back to the December 31st level. If you take a look at the SPYs here, the SPYs yesterday breaking through the rising price channel, but it's important to understand you had volume to the downside. Now, these other on the SPY here, if you didn't catch the first hour, you should go back and listen to the archive of that show, because I'm not going to repeat all of those things here during the second hour because too much to cover here. But what I do have overlaid, or I have identified on my chart underneath or on top of the candles, are these high percentage VIX swing days. Anything over 20% I've got labeled on my chart. Yesterday happens to be the third most percentage gain in any two trading sessions on the VIX, with a 43% gain out there. So that is important, and it's important to come back and take a look at what those days mean. Do they typically tend to be bottoms, or do they tend to be tops? What are they? Should you expect a bounce? So today's bounce here is not to be unexpected, especially if you go back and you take a look at it. So here you had one as well. It was day number 7. It was the 7th highest volatile percentage day, which was 34% on February 25th out here. So we are starting to see some volatility. If I go ahead and pull this back here a little bit further, you can see all these volatile days back in the August time frame. As I said, I really covered this pretty well inside the first hour here. Let's go back here. The one where we did leave off was in 2007, also at the high here. So let's take a look at this. We saw a very volatile day here. Back in and this is where we're taking a look at a time frame that may be similar to what it is we're experiencing now. This was on April 27th when the VIX made the number 12 percentage gain out there. It did it with 30%. There was some volume off of the top there, 355 million shares inside the SPYs. We didn't get that today, or not only today. We didn't get that yesterday. But what you can see here is you had 355 million shares off of the top. That's volume off of the top. Made a high out there with 143, and on the bounce back over the ensuing couple trading sessions, what happened? 193 million. So you're off the top with 355, 300 on the next trading session. Tries to take on that swing point with 193, and then boom, 269 million. Started to pick up volume on the way down out here. I suspect that is what we are also taking a look at. We are very close to that sell in May cycle out here. And yesterday's volume off the top. Yesterday, with the S&P getting back below 1276 out there, says that the S&P at this this stage was a false break to the upside. We go back and take a look at 2007 out here. 2007, that's a swing point the SPYs were dealing with. That was October the 11th, 233 million shares. The high out there, 157.52, 154.54 is the low. The volume made out there was 233 million shares. The first time we saw any kind of big VIX day, 295 million shares. That was not, 5-6 trading sessions later. On October the 19th, you then saw a normal retracement and actually was a test of that swing point, and we could see that taking place as well. So back in October 7th, the high was made on October 11th. You saw a test of the swing point, a couple of sessions, October 29th, as well as October 31st out there. That was testing 220 million, going against 233. The first test was with 106 million. That was on October 29th, and then you started to see the real volume come out of the SPYs, 332 million shares, as it made number 18 on the list of percentage gains inside the SPYs out there. So putting all that together, volume off the top, significant reversal patterns, which we're going to take a look at here. The fourth, take a look at the 3 and 4 candle. Evening and morning star patterns out there, just to try to understand what the message of the markets is, if this was just a one-hit wonder or not, and I don't think that it was. So that's on the SPYs. Let's go take a look at the other ETF structures out here. Let's take a look at the small caps. Now, the small caps obviously being the weak link out here. Yesterday's volume, you had volume, 101 million shares out there. 101 million shares, taking out the swing point low from April the 5th that only had 46 million shares. Even if you try to take it back into this little set of swing points back here in the February 25th, February 26th level, that only had 47 million shares. So the Russell 2000, moving lower with volume. What does that say? It says it wants to come all the way back here into January 2nd, December 31st, where that breakout level was, where you last had some volume, 116 million shares. The top of that January 2nd candle, 86.91, where we're going to get all of our messages in the market, is likely going to be coming from the Russell 2000. That has been the leader to the downside, the one giving us the most bearish signals at this stage out there. Let's go take a look at the Dow Diamonds. What did the Diamonds do yesterday? There you go. You've got highest volume trading session taking you all the way back into November of 2012 when it did 18 million shares. Yesterday, you did 14 million shares. That's after making a high with only 6.9 million shares 2 trading sessions earlier on April the 11th. So we're starting to see volume come out of the woods. Very bearish reversal candle in here inside the diamonds. But we'll take a look at the Dow instead and take a look at that reversal candle because the index shows that reversal pattern a little bit better. Let's take a look at the Qs. The Qs, the only one without any substantial volume off of the top. So the Qs, where we're going to get also a Q from. Yesterday's move down 48 million shares, really into this rising price channel here. So we'll see, when we see a clear break of this rising price channel, we'll also see the Russell 2000 begin to fall apart again as well. 877-927-6648. You've got the Dow up 83 points right now, S&P up 10, trading at 1562. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow up 92 points right now. S&P up 10. Let's go check in on the metals markets here. Right now, we've got gold up 14 bucks, so giving back its early gains. Silver down 4 pennies right now. Gold trading out at $13.75. So let's take a look in here. And if you take a look at that little bounce that we had in gold, number one, what you know is that, and we're looking at a 30-minute chart out here. So on the 30-minute chart, you can see truly in the oversold territory. So just simply having to work that condition off. And if you take a look at, we saw a big down thrust in gold yesterday at 11 o'clock. I'm talking about a volume day, volume time period. On that 30-minute time period, we saw 62,000 contracts. All that gold was doing here this morning, it was going into that candle. It was doing that on volume of something more like 27,000 contracts. I don't think so. 27,000 contracts going into 62,000 contracts, and then what we've seen ever since then is a little bit more volume to the downside. So 31,000 shares in that 10 o'clock session. In the 10:30 that we're at right now, about another 31,000 shares as it moves a tad lower. Of course, if we go take a look at the weekly chart out here, the weekly chart on gold. Where is that on my screen? Here we go. Here's the weekly chart. The weekly chart here says down at the 1289 level becomes a 1 to 1.272. A to B equals CD. 1270-ish. That is your target range after breaking a consolidation level. I haven't seen anything break a consolidation level like this and move that quickly, but this is Goldilocks that we are talking about out here. So it looks like somewhere in the 1270. Tom is calling for about the December 4th swing point. So anywhere between, let's say, a low of 1147 to the 1270 mark. It looks like that is the destination, or potential destination, I should say, for gold out there. And then we'll see what happens as those levels are approached. Big volume yesterday in the gold contract. Let's go take a look at light sweet crude. By the way, on silver here, I don't know. I guess I didn't take a look at silver. Let's do silver. I did say we look at the metals. Silver also breaking the $9.50 consolidation level. That would send silver all the way down to the $17 range. The nice thing about that is at $17 and change, you have a nice little Gartley, a weekly Gartley buy pattern, and weekly charts are stronger than daily charts out there. So be patient. Let this thing play out. We'll see now in the weekly chart. You can see here that silver is in the oversold condition. So it'll try to work that off, but just be patient here, and I think gold and silver will give a nice buy. Nobody else out there will probably want it except for all of us tigers and tigresses out here. So that's on silver. It's in the $17 range. That probably becomes your move. And I say probably because we won't know till we see candles and volume and reversal patterns in the marketplace. So we just know the price point area that we are targeting, and then we'll wait and see who shows up for work down there. We take a look at light sweet crude here. Light sweet crude traded out at $87.78. This is moving into the swing point lows from November of 2012. So $84.05 is its next stop. More likely $81.76, right around $80 to $81 range. Right now, just trading inside the swing point from November of 2012. Let's go up to Concord, Mass, to Mark. Mark, thanks for calling. Thanks for holding. How are you?
I'm fine, Steve. Upset about yesterday, but
absolutely.
I guess that goes, and that goes with the territory. It's time to go to church, and I don't want to dwell on this, but I normally do freelance photography work, and with the company that does the photographs for the marathon, and for some reason they did not call me to do that this year. And I go to church twice on Sundays to do two different churches. I'm not going to get into that, but yeah. Sometimes it pays to say your prayers.
I think it always does.
Yeah, but someone on the other side was looking out for me. That's, I said to a couple of my friends yesterday. I said, they never called me to do the marathon, and maybe now I know why.
Yeah, no, definitely a tough day out there. Obviously everybody wants to know kind of exactly what happened and who was responsible and everything else. But it's all those people that are injured that we need to be sending all that white light out to.
Exactly, and so I didn't miss your 9 o'clock. I just caught a glimpse of your 9 o'clock show, and I didn't. I just turned you back on. They had a press conference, and I flipped over to CNN to watch all of that.
Absolutely.
But they basically didn't think much of anything. I'll hold through the break to catch you on the other side.
That'd be great. 877-927-6648. Send a lot of white light out, folks, to all those injured, in the hospital out there. They could use it. Their families could use it. 877-927-6648. Dow's up 88 points. We'll be back with Mark and Concord in just a minute.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Master Show. Folks, Dow is up 88 points right now. Granger GWW up 7%. That's up $16 and change. And Sarepta Therapeutics down about 14% off 561. We're going back out to Concord, Mass. to speak with Mark. And Mark, you had some questions about the market or the S&P. Tell me how I can help you.
Well, I guess one of the very first things I learned from Tom when he had his office up here, Steve, was gap filling. And should one who watches the market, whether you're a trader or an investor type, should we view yesterday as a big gap down and today's rally back up as the filling of the gap, and then maybe then going back down maybe either later in the day or tomorrow?
Well, on the S&P itself, if you take a look at the index, you don't see a gap out there. So, are you looking at the SPY maybe?
Well, I'm just saying in general, more from an investor standpoint as opposed to a trader standpoint, because it came down so hard yesterday. I don't necessarily mean a gap as we think of it in technical trading, where we have a real spike down. I'm thinking of a very, very big gap, meaning maybe all day being yesterday, and now today we want to fill that part of that gap back up, and tomorrow or later in the day we'll continue down. Does that analogy make sense?
Well, my take is this. Number one, the S&P specifically got up over 1576.09. So got up over the 2007 highs. So it was joining the Dow, joining the Russell 2000, joining the Nasdaq out there. And then it gave it up. And the thing is that yesterday what it did was it gave it up on volume, substantial volume. And being up at those highs, what we saw yesterday was volume off the top. That's number one. That should be pasted, on anybody's board, window, computer screen, is yesterday was volume off of the top. That is always the first sign of if you're going to look at an equity, of something ominous to come. Doesn't mean it comes right away. Yesterday, also, if you take a look at the VIX percentage increase, it was a 43% increase. If you take a look at the history of the VIX, that was the third highest percentage reading out there. If you go back and you take a look at the VIX, we did this during the first hour. It is not unusual at all to see a bounce when taking and having a high reading day out there. And in this case here, that's what we're seeing take place today. So that is to not be unexpected at all. We take a look at yesterday's volume off the top and the big VIX reading coming from an area where the market was more towards the overbought than oversold range. That gives you a significance of being of an important high out there. So we gave up the 1576.09 level. If you take a look at, we are 10 trading sessions, maybe it's 9 or 10 including today, away from May 1st. Is May 1st an important day? Look, the sell in May in 2010, that selling began April 27th. Did the selling begin yesterday? Yeah, yesterday was the first day of markdown without any question whatsoever. How do you get that back? The only way would be the bulls would have to have a volume day equal to or greater than yesterday as it moves to the upside. Until that takes place, what started yesterday was markdown. Some type of retracement, yeah. Does the market want to retrace? Sure. I say sometime between now and the next 16 days, we see that full-blown sell in May take place. When we take a look at candle formations yesterday, so we had another element to this whole picture here, is that in the candle formations, we see this little 4-candle reversal pattern. If you're looking on Tiger TV, I'm going to blow this up a bit here. You're taking a look at the day that took out the highs in the S&P, the 2007 highs. That was on Wednesday, April the 10th. That bar there, very important bar. I said that markets do not end on those style bars. As bars go, I said that was very close to, with one being the strongest, that was very close to being a type 1 bar. It had that little bit of wick at the very top, so we gave it not a full 1. Maybe it was like a 1.5 or something like that. And then we have these two small-bodied candles traveling just slightly above or within the body of that April 10th session. And then, boom, yesterday it opens, the S&P opens at 1588, closes at 1552.36. The low was 1552.28. That is truly a type 1 candle. It, even stronger. Look at the candle. The candle is signaling a whole lot, plus the volume behind it. And this here created, if we took a look at the November 16th level, when nobody wanted to buy the market as well, as the market was moving down, the candlesticks gave us the same reversal signal. You could flip this over. In fact, I would say we have an even stronger conviction on the way down than we did on the way back up in November 16th. So we've gotten the reversal candles there. It's given us every indication, Mark, that the market is starting that markdown stage. Is this going to last a week, 2 weeks, 3 weeks? I say it can last anywhere up until probably the first week of May before we see some real intense selling take place. That doesn't mean that it can't start next Monday. But I do believe that the longer-term picture now has changed. This is the early stage. Candles are leading indicators, and so for those that would take a look at exponential moving averages or other patterns out there, those that are lagging indicators, they're going to take a while to get in gear. The same thing happens down at the lows here. Mark, I'll do this. Let's go back and take a look at the Dow itself, because I think the candle pattern of the last 4 days is very significant. I've got that highlighted. We took a look at that on the S&P. This is the Dow just simply because I can go back to the 1928 time frame. So we've looked at the November lows. Those are highlighted here. I'm going to continue to go back further. If you take a look at as the market was making its lows back here in June, you have that same reversal pattern. Same reversal pattern that just took place here inside the Dow yesterday. Take a look at the fourth day. You can take a look at that long-ranging bar here. That is a Type 1 candle for sure as far as strength. Nobody wanted to buy the market back in June. Here, if you just simply paid attention to this candle formation, maybe in the next time it shows up, you'll have a different opinion about it. Take a look at how this really engulfs, in essence, not an engulfing candle, but it engulfed the session of that downdraft day on June the 1st out here. How about up here at the highs? A little bit smaller, but it's the same candlestick pattern back in March 20th. Of 2012. That high ended up being tested a couple of times before price moved down into that June level out here. If you take a look at the November 25th level inside November 25th of 2011, you see the 3-candle reversal. This is the reversal pattern that most people would pick up because it's called a 3-river evening or morning star out here. But what I've learned is the real power is, quite frankly, these patterns are important, but the 4-candle, 5-candle patterns are even more important. Take a look at it, picking this level up here back at the highs in October of 2011, just as the lows in November of 2011. So until some other competing patterns or something else shows up, I've got to go with the information, Mark, that the market has given to us. If you take a look at the highs in 2011, you see a very similar pattern. This pattern out here is to be watched. You saw 2 dojis. It wasn't a total wide-ranging bar, but the 4-candlestick reversal pattern out here that we saw at the highs in 2011, very significant to be paying attention to. And I first started picking up on this back in March of 2009. I'll go back to March of 2009. Now, on March the 5th of 2009 was when I went 100% all in long the markets, and that's after it was making a 1.272 Gartley pattern. Now, I was doing that on the S&P. I wasn't paying attention to the Dow. The Dow itself had made a 1.618 butterfly pattern that you can see here. So you had that pattern going for it, and as well, what you had right here was that same 4-candle reversal signal that we just saw yesterday in reverse. And what I was doing yesterday, I was doing the show, was filling in for Tom while he was traveling back and forth between studios, Mark, and what I wasn't certain of is at the highs, where there's many of these 4-candles, maybe even 5-candle reversal patterns that look just like this, did they mark highs, or was it really just something that worked at the lows? And just simply starting to go back through that early this morning, what I'm identifying is it also marks highs out here. So I think I think we got some real significant signals. And the question, if you go to the ES Mini 30-minute chart right now, that was really on the intraday chart where we saw that the ES Mini was truly in significant oversold territory. And right now what it did so far this morning, it made a 0.382 retracement. That's normal. Some folks coming off of the elevator. Looks like to me, I don't think that this is all that we're going to get out of the bounce. It may be, but it wouldn't surprise me. Even if the ES Mini gets up to 1574, all that's doing is setting up the next Gartley sell pattern that's in the marketplace. So I wouldn't get suckered in at this stage in trying to buy this one. I think the bulls have been.
No, I guess my real question, Steve, was how are we to look at the rise of today? And we're off the highs already. We were up, 100, 110. We're only up 71.5 now. So I guess I might have answered my own question in the sense of, we just reacted to yesterday, and I guess it's probably more Tom's expression that we had all this energy coming down, and we had to do the opposite by releasing that energy, coming back up a little bit before we can come down further.
The market, even if we go back to 2007, and you take a look at coming off of the highs. If you look at the intraday chart, you're not going to see a straight down move. You're going to see a breathing pattern. You're going to see markets getting into oversold conditions on an intraday chart and working its way off, and that's all that we're doing. That's all that we're doing. And, look, if this market, so over the course of the next, as I say, between now and I'm going to call it the first week of May, even if the market goes back up, the ES Mini to 1593, we get above the 1576 level, we go back and we test those highs. We can go back to nearly every chart where there's volume off of the highs, and that was always the first signal to get out. And what Tom really taught me as well is that the market will give you, typically, not always, but there's a high probability it will give you another chance. And what I mean by another chance is you'll see a market moving up. And what happens is people start to say, okay, it's over. And, you start to say, all right, that was just really a scare. I think this is real. I absolutely think this is real. The candlesticks, just based on history out there, that's what I'm going with. And, I mean, the patterns are clear to me. It was different when we got above the 2007 level back last Wednesday, even though it was on light volume. If the market came back and it tested that level and it stayed above it even on light volume, I was like, okay, we've broken out in the Dow. We've broken out in the Russell 2000, which did it on volume. We've broken out in the NASDAQ. People are spending too much time going back to 2000 in the NASDAQ. You just need to look at 2007 so that we're all using the same benchmarks out here. So, okay, the S&P is going along. But yesterday was a whole different scenario. And you had volume off the top. And I won't change my mind until I see until there's some other news. So market wouldn't matter to me whether today, tomorrow, the next day, even if we get back above 1576, unless there's some volume behind the move. We've just gotten that signal that I think sell in May, and the question is whether it's sometime in April is now where we're at.
Yeah. All right, my friend. Well, fine. Thank you, and you have a profitable day trading.
I will. Thank you very much, and thanks for calling. I appreciate it.
And Stevie.
Yeah.
Stevie, keep sending that white light for us up here in Boston, please.
Oh,
yeah,
absolutely. Absolutely. You keep us posted.
Okay, my friend. Thank you. Have a good day.
Alrighty. You bet. Let's go take a look at some of these stocks here, popping and dropping here this morning. Let's go look at Grainger, GWW. That is the leader in the clubhouse to the upside here. That is up a nice 7%. You can see with volume. So let's go see what this is trading into. So far, taking out, as we go on the left side of the chart, at all-time high. So it's taking out, this could be a large A to B equals CD up. Let's go see what it finished, though, first here as we pull this back. Well, there's all kinds of A to B equals CD up. So let's first take a look at Grainger on the shorter time frame here. Right now this morning, 553,000 shares traded in only an hour and about 18 minutes of time, taking out the swing point here from March 6, 2013. That only had 378 million shares. So you've got some nice volume inside this equity. Let's put this on a longer-term time frame. Let's put this in on a weekly. And let's see on the weekly chart out here. And let's come in off of, boy, you got a nice little hammer candle back here, June the 8th. Here's you got two hammer candles inside the Grainger on a weekly chart. So, folks, you really do want to understand your candlestick patterns because it's just allowing you to read the message of the markets. I know of no better way to read what the bulls and bears are signaling to you than taking a look at the candlestick pattern. So take a look at Grainger. GWW is a ticker symbol on the weekly chart. We know weekly is more important than daily. Look at the week of June 8th. You have a nice hammer candle out there. You come back and you kind of test that area with another hammer candle 4 or 5 weeks later on July the 13th out here. If that's not signaling that it's putting in a bottom, I don't know what is. It tells you most certainly where the bulls and the bears are hanging out. And then it makes this little morning star candle reversal pattern here. That was the week of December 7th, December 14th, and December 21st out there. You had on the weekly chart a little bear sash. That should have been resistance. It has taken that out, and looks like it's going to be taking that out with volume. That is Grainger, GWW. Dow's up 71, S&P is up 8. We'll be right back.
Are
you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, and stay tuned. We do have Basil Chapman. He is following this show, and then as we do on Tuesdays are wonderful around here at TFNN. We've got the Options Hour, followed by Daryl Martin from 1 to 2, David White 2 to 3, and the Tom O'Brien Show from 4 to 6. Right now, the Dow is up about 67 points. We're going to check in on United Rentals. I understand they're out with earnings today after the bell. As well today after the bell here, out with earnings, you'll be paying attention to, I imagine, CSX Corp, Intel, and Yahoo. out with earnings as well after the bell. But let's check in on United Rentals. The ticker symbol is URI. And what we can see here, and take a look at this stock chart, we can see where the lines in the sand have been drawn between the bulls and the bears. We can see what camp that they are in. If you take a look at the bearish position, you have this little bearish engulfing candle that took place on February the 20th out here when it made a high of $56.87. Volume was 2.9 million shares. That level was tested with 3.2 million shares, so volume was moving up into that swing point, or price was moving up into that swing point with volume, 3.2 million shares. But however, the bears decided to take control of that session, at least by the end of the day, create a little shooting star candle out here. So the line in the sand with regard to an area of resistance is going to be the top of that shooting star. That is the cousin of the hammer that only happens up at highs out there. And speaking of hammers, the cousin was hanging out at February 26th low out at the price point of $49.10. 3.5 million shares down there, so you got 3.5 million to the downside. You've had 3 million to the upside, 3.2. You got a hammer candle right down here on February 26th. And then a cousin called the bullish engulfing came in, saved the day as price was being pushed down on April the 5th. So you can see that line in the sand. Support on this equity is at 2.5 million shares. Is at the price point, I should say, of 48.47, and resistance here up at the level of 57.24. Yesterday's move down 5.2 million shares, so you started to get some volume off of the top, off of the highs, And when I talk about volume off of the highs, it doesn't mean it has to be the very next candle as it made a high on February 20th. This thing just simply hanging out at the highs out here, and you did see some volume. If we take a look at it, had a little bit of a gap up here. With 4.5 million shares on March 5th. So right now it looks like more sellers than buyers in this equity. If earnings are not appreciated today, or revenue is not appreciated after the earnings release, this equity will move down to the price range of about $39.70. That'll take you all the way back to the high volume day of October the 17th. It's got a little gap out there. The low of that gap is 35.36. The high of that gap is the prior candle on October 16th out at 34.11. That's what the daily chart is showing inside United Rental. If we flip over into the weekly chart out here, see if there's any different message of the markets. Inside the weekly chart, what we see here, we see a bearish engulfing candle. That's the week of February 22nd. We see a bear sash candle up here at April the 5th. And right now, this week is not over. Right now, this is also bear sash. So you're seeing the bears kind of hang out at these highs out here. Let's see if it got over this swing point on the weekly chart, which is the April 27th level, 9.1 million shares. As price moved above it, only 8.9 million shares out there. So it got above a swing point on light volume out there. That is on United Rentals. Folks, stay tuned. As I said, Basil Chapman will be up next. And if you're off to start your Tuesday, have a terrific Tuesday. Send out some white light to all those folks up in Boston. All those folks need it, especially the ones that are going to be recovering from all of those injuries. Stay tuned for Basil Chapman. I look forward to seeing you in the morning. Have a great day, folks. Take care now.